There are multiple bearish stock market patterns setting up, and I'm not just talking about this rising wedge, which now we've had multiple closes below the lower trend line. Then over the weekend, we had an unexpected news announcement, and we'll see how this is going to affect stocks coming up next week. Last week, we saw the Fear and Greed Index move from neutral over into greedy territory. And we look at the most recent investor sentiment survey. We also saw this week that the bullishness was jumping up. It went from a reading of 42.5 to 49.5. Look at the neutral category. It went from 27.5 dropping down to 22.3, and the bears also stepped back a little bit from 30% to 28.2. However, even though we have these bullish readings, it does not mean we are out of the woods just yet. Let's not forget, on the daily time frame, we have a rising wedge pattern, which is normally bearish for stocks. We've had one close below it, almost a second close below it, and then right here on Friday, we got a close below the rising trend line at a time when the MACD indicator is just flatlined out there. But I do want to warn you guys, because we do have conflicting signals out there. One of the signals I was concerned about for a little bit of time was the difference between the 2-year and the 10-year yield. I was worried about it rising on the way up. Normally that can have bearish implications for stocks. And notice recently it has started to pull back here just a bit. Also, if we come over and look at the Dow Jones on the chart on the top versus the transportation index, notice this week, even as the Dow Jones basically formed a doji candle, which essentially is a candle of indecision, see a small little wick on top, small wick on the bottom with a very small candle body. Well, look at the transportation index. It has been on one heck of a move up. Ever since the transportation index has broken out from this declining trend line, it's just been up, up, up and away. And even this week, when we come over and look at the SPY versus the HYG, which is going to be high yield bonds, and we can think about this as risk on, risk off. What is smart money doing? And notice right down here, HYG, the little line chart on the bottom, it has also broken out that declining trend line and has been ripping on the way up. Even on Friday, as the S&P 500 had a down day, notice even HYG was still able to go ahead and start to push up higher. But something that does have me a little bit concerned, we come over and we look at the IWM real quick. Notice the close on Thursday and Friday. Thursday, we had that selling tail on top of the candle. And on Friday, we have that doji candle. And the reason why I say this is so important, look at the strength difference in the Russell 2000. You see we've went up quite a bit over the last 2 weeks or so, and then we compare that over here to the QQQs. Notice it's just been chopping around, having a hard time getting out of its own way, and the SPY kind of just chopping around, also having a hard time getting out of its own way. And I know what you're saying, Mike, you are over exaggerating. Well, I'm going to share with you guys some other concerning things that we have setting up in the stock market as well. But first, let's come over and look at how the indices fared across the board on Friday. We can see there was only one indice in the green out of the 4 US indices that I watched, and that was a Russell 2000. It was only up 0.25%. We look at advanced indices versus declining. Notice on Friday, we had 55.6% of issues declining on the day. Then as we come over and look at the sectors across the board, notice on Friday, the leader out there was real estate, followed by energy, then industrials, and financials was able to actually get positive on Friday as well. But look at the 1 week performance. We look at the 1 week performance real quick. Notice financials was actually in the red, down 0.83. And this is going to be important because if you think we're going to have a sustained stock market super rally on the way up, we most certainly want to see financials participating on the way up. If they don't, that's going to be another warning sign that stocks could be in trouble. Now we come over here and we look real quick at the dollar index. Dollar index, we can see over the past 2 weeks or so, it's been moving on the way up. Friday, we actually get a doji candle. Now, as we look at the dollar index, we most certainly can't forget about the precious metals like gold. Gold, we can see still nearing all-time highs, but notice they're trying to push it down. On Friday, we actually saw a little bit of selling. Now, they were able to get it back up. We were talking about this on the live stream. If you guys don't want to miss, make sure you subscribe. You have the bell notifications turned on for all. But on this move down, this was a pretty substantial move down in gold on Friday. From the high right down here to the low, gold moved down 85 points. That's pretty massive, but then it was able to get right back up into the range. Then we come over and look at silver real quick, and silver has been a beast out there. Some of you guys have made a lot of money in the prop accounts. It's been very beneficial for a lot of you guys passing the evaluations. I got to raise my hand. I am not one of those people that has been trading silver in any of my funded accounts. Notice though, on Thursday, we had that hangman candle, and on Friday, we failed to confirm it. But notice with the presence of a wick down here, that shows us that at least sellers are attempting to push price down from these upper prices, from these upper levels. And one of the patterns that we'll see actually shape up quite often when we get a hangman candle, the market doesn't necessarily just drop right down, but it becomes some type of topping pattern. Maybe even early, maybe sometime this week, we'll see a spike up, and then we'll see basically a look above failure, and then maybe it'll be over with. Keep in mind, silver is not that far away from that almighty $100 strike price. Now, let's take a look at a chart that is definitely troubling in my personal opinion. Let's come over and take a look at yields real quick. If we look at the 10-year yield, this is something we've been talking about for quite some time. Notice this white line, basically a resistance level. We've pushed up a lot of chopping around, and then look on Friday, we're starting to get that big, strong bullish push through this area, and that's even before the news that I'm going to share with you guys here in a few moments. And notice the 10-year yield pattern completion for the ABC target is going to be up here at 4.35%. As interest rates start to rise, that also is probably going to weigh on stocks in the overall economy as well. So most certainly in the coming days and weeks, we want to keep an eye on the 10-year. Is this simply going to be a look above failure, or do we continue to push up towards that ABC target? Now, I do want to remind you, when we look at what could potentially be catalyst this week, on Monday in the US, it's essentially going to be a bank holiday. Now, I do plan on streaming in the morning. We'll see what type of volume is out there. But then we also look throughout the week, and let's not forget, on Wednesday, we get Trump speaking at 8:30 a.m., but then on Thursday, we get the Fed's preferred measure of inflation. This is going to be the core PCE price index. Now, this could be very interesting because we have the next FOMC meeting coming out in 10 days. And we scroll down here real quick and see what the market's priced in. There's a 95.6% chance that the Fed will not be cutting rates. But let me know your thoughts in the comment section down below. Do you think Powell and company are going to cut rates at the next FOMC meeting? Or are you on the side with the market where you believe Jay Powell is not going to go ahead and cut rates for the dawn? Now, before we go ahead and jump in and take a look at some more bearish patterns setting up for stocks, I want to let you guys know right now, Take Profit Trader, 40% off all the evaluation accounts. Best yet, zero activation fee. If you guys want to take advantage of this offer, use the link in the description box down below. Use code EPITOME at checkout. So as we go over and look at the SPY out here on the weekly chart, notice this candle that we had this past week. Wick on the top, wick on the bottom with a very small candle body, basically a candle of indecision. Now, along with this candle of indecision, over the weekend, we just saw this news release. Trump plans 10% tariff on European countries over Greenland. What this means for markets. Now, this is going to be important because if more uncertainty comes into the market, we all know that stocks could drastically drop. And we scroll down here real quick and we look at some of the key points. Not only is he announcing a 10% tariff going into effect on February 1st, but also notice the tariffs are threatened to increase to 25% on June 1st if a deal for Greenland's purchase is not reached. Now, again, this could pose massive uncertainty in the market. And look at the next line right down here, which we already spoke about a little bit ago. 10-year Treasury yield increased by 7 basis points on Friday. With more uncertainty in the market, what do we think is likely going to happen to the 10-year yield? Now, coming back over and looking at the SPY, what do we have on the MACD indicator? Basically, flat line down here, slight bearish cross, but it's just very, very minimum. On the daily chart, we've already talked about that rising wedge pattern, but to play devil's advocate, there are multiple ABC patterns to the upside, which could potentially still come back and get tested. First one coming in about 702.60, the secondary pattern all the way up here at 709.65. However, if we get price acceptance below this lower trend line, look at this high volume node right down here on the composite profile, right around 680.84. To me, that looks awful juicy. Then as we come over and look at some of the gamma exposure levels, first thing to note, we are in negative gamma. And we come over and look at some of the gamma exposure levels, and is it any real surprise that level we just spoke about with the composite profile also aligns to the highest gamma exposure level right down here at 680. If that level gives way, then we'll be looking at 675 and potentially down here to 670. So if we come back over and we look at the daily chart, where does 675 come into play? That would be all the way down here, well below this secondary ABC pattern. And then 670 would bring us all the way down here towards this other swing point. If we start breaking that level, at that point, both of those ABC targets that we spoke about would then be invalidated. They would essentially be busted patterns. So it's going to be very critical to see how this ends up playing out. As we come over and look at the 30-minute volume profiles, notice we had that large gap up on Thursday. On Friday, we came down filling that gap. But if we scroll this back a little bit, notice we still have an unfilled gap down here at 483.15. And if we go down and fill that gap, I got a sneaky suspicion we are going to go down and try to visit that 480 strike price, especially with all that gamma exposure down there. However, if all that wasn't bad enough, we come over and look at the 4-hour charts with the weekly volume profiles. In blue is the weekly volume profile. Now, we did close within value this week. Remember last week, we closed outside of value, and I warned you guys the next 1 to 2 sessions, highly probable we were going to come down there, and that's exactly what transpired this week. But now notice the pattern that we have potentially setting up, and I am going to play devil's advocate here because this could play out in one of two ways. First, we have a high up here, so we can grab our Fibonacci extension tool. We can measure the A to B leg, the B to C leg, and look for the corrective move. That gives us a price completion at 69.03. But wait, could there also be a secondary pattern? If I go ahead and remove that drawing object, notice we have the potential where this is actually going to set up a higher low. Here's a low. Here's a potential higher low. Now, if this starts to give way, this would invalidate any potential for this secondary pattern to play out. And that would be an ABC pattern just like this. And notice that pattern completion would be up here at 7,054. But again, the validation point for the pattern would be a break of the swing point up here. And the invalidation point would be a break 6960.25. We come over real quick and we take a look at the daily profiles on the 30-minute chart. On Friday, we basically had a D as in dog shape profile. But what I do like about this is on Thursday's 5 o'clock video, I talked about this area coming back and being tested, and that's exactly what transpired on Friday. But notice we're kind of in a little bit of a pickle here because we have an untested point of control above us at 7,009.50, and we also have an untested point of control below us at 6943.75. Now, normally before a holiday, the market tends to be a little bit more bullish, and the day after, we're on Friday, we were not that bullish, and Monday is going to be a holiday in the US, but for us futures traders, at least we'll have the opportunity to trade the markets for roughly half a day. So now as we look at the volume profiles on the daily chart, notice right down here, we have value area low coming in about 6976.25. If we start flushing below that level, then my eyes are naturally going to gravitate towards the swing point down here on Friday. We break Friday's low, then I'm going to turn my attentions all the way down towards that untested point of control. Now, in the event that we get down below 69.43, I want to come back over here and look on the 4-hour time frame and look at where could be some additional targets. Well, if we look right here, 69.31, the high volume node would be a logical target. Also, the low from last week would be the next target. But then as I'm looking a little bit lower, I really like if things start to get ugly over the next couple of weeks, watching for this minus development area to come back and get tested all the way down here at 68.72.5. And let's not forget, we are now in earnings seasons. Last week, the banks kicked it off. On Tuesday after the bell, we're going to get Netflix coming out. And then on Thursday, we're going to get Intel coming out. And when we come over and look at the big expected movers out there, Netflix expected to move plus or minus 7.5%. United Airlines plus or minus 7%. But then look at Intel out here on Thursday. Expected move plus or minus 9%. So we could be setting up for some big moves out here. And it's not just week. The coming weeks, we're going to get more and more earnings coming out. So now as we come over and look at the volatility index real quick, notice we've seen the VIX starting to pop up off this low a little bit. And every time the VIX pops up, they simply smack it back down. But let's go over here and look on Friday. What do we have transpire on Friday? On Friday, we woke up to the VIX gapping down. The VIX ran up, came back down, but then at the end of the day, what do we see the VIX do? Trying to pop up once again. When the VIX is at these lower levels, we are very prone to a volatility spike. And maybe Trump's news over the weekend has a little bit to do with the potential volatility that is about to happen in the stock market. Now we come over and look at the QQQs real quick. What do we have taking shape on the weekly chart? we have this basically triangle up here. And notice that weekly candle, it closed lower than where the open was, and we have a wick on the top, wick on the bottom of that candle. MACD indicator on the weekly chart also crossed to the downside, but not really angling too hard towards the zero line just yet. We come over and look in the daily chart. We can see we have all this consolidation, and we do have a potential for two ABC patterns to the upside. The first one, 636.28. The secondary pattern would be up here at 647.85. Now, I want to caution you guys, with these patterns, you want to know where the invalidation point is as well. The first ABC pattern up here at 636 would be invalidated if we come below 610.16. The secondary pattern gets invalidated if we break 599.44. Also, if we look at the MACD indicator real quick, what's it doing? It just barely crossed to the downside out here on Friday. Now, as we come over and look at the gamma exposure levels, one thing to note, in the Qs, we also have negative gamma, at least as of Friday. And then when we come over and look at the gamma exposure levels, notice we have quite a bit of gamma exposure to the downside. Now, to be fair, there is a little bit of gamma exposure to the upside as well. But one of the levels that we've been talking about for quite some time is this 610 strike price. But now look, even below that level, right down here, right around 600, we are starting to build a lot of gamma exposure down there. And this is going to be critical because that will be the invalidation point for the secondary ABC pattern. And then we would no longer have any ABC targets to the upside. Also, if we do come down below that 600 strike price and that level is not defended, watch out, we could get a waterfall style effect and see stocks come crashing down substantially fast. First stop would be all the way down here at 580-ish or so. Now, as we come over and look at the Qs on the 30-minute chart, notice that gap from Thursday was filled on Friday, but I also want to caution you guys, we scroll the Qs out here just a bit, we still have another unfilled gap at 613.08. And then we scroll back even a little bit further, and we have another gap down here at 599.60. What we already talked about just moments ago, right down near that lower swing point, we have a lot of gamma exposure right down at that level. So it's pretty critical. If indeed price does get down there, does this level hold? Do they defend it and we start rallying back up? Or did we simply have that waterfall style effect? Now we come over and look at the Nasdaq futures markets real quick. Notice on Friday, we can see this pattern a little bit clearer. We have this A to B leg, we have the B to C leg, and now we're starting to get that C to D leg, and we'll see if it actually completes to the downside. If we grab our Fibonacci extension tool, we measure A to B, B to C, and we project down here for D. That gives us a price completion at 25,320 or so. Now, there is going to be a little bit of difficulty with this. We need to get below this high volume node right here. And the pattern truly is not validated unless we break this lower swing point. But something I talk about all the time on the live stream, if we were to pull a fib of this last leg on the way up, I want to pay very close attention, because if we start getting down and really breaking the 786, then we can have two additional targets within this bearish pattern. One could be a retest of this low, which is right down here at 25,420 or so. And then below that, we look for that ABC target at 25,320. Now, as I scroll this chart out a little bit as well, if the market wants to get dicey out here, let's go ahead and pull a fib of this last leg up from roughly the middle of December until the current time. Notice we have a 61.8 level, and if we really start giving way through there, then I'll be watching the 786 at 25,136. But if that level gives way, all bets are off. We are likely going all the way down here towards the lows on December 17th. And if that doesn't hold, watch out. The Nasdaq's going to be going substantially lower, maybe even going back and trying to revisit the lows from November. Now, if you guys have been thinking about trading with Lucid Trading and you want to understand their payout policies across the different account types they have, then you want to make sure to watch this next video right here.